Hey, what's going on, guys? My name is Alex, and this is the Equity Odyssey podcast. And today I have the pleasure of getting to interview Ash Patel. So, Ash is a commercial real estate investor, and he's over his career invested in over 30 properties, transacted over $50 million in commercial real estate, and really specializes in value add opportunities, mostly in the non-residential space. So, Ash, super glad to have you here.
Alex, glad to be here. Thank you.
Yes, yes. So the Equity Odyssey, we really like to dig into the journey for you and the ups, the downs, the tipping points, the lessons learned. So for our audience, for context, can you kind of give us what is your backstory? How did you get started and how'd you end up here?
Yeah, 15 years in corporate IT, always had side hustles because I knew that I wasn't going to work for somebody forever. One of those side hustles ended up being real estate, and I truly found my calling, fell in love with it. And more so, it was commercial real estate, meaning non-residential. I had my very first property that I had was a mixed use building. So apartments that were rented out to college kids, a grocery store that essentially sold them a bunch of beer in a college town. And I was out there unclogging a tenant's toilet one day, look out on the roof of the store, and I could see an HVAC company replacing rooftop units. So I went down to the store and I asked the store owner, I said, "Hey, what's going on?" And he says, "Ash, our AC went out, so we're going to replace the entire HVAC system." And that was a pivotal moment where I realized residential tenants were destroying my apartments, commercial tenants were improving my property to the tune of $30,000 for a new HVAC system. And it shocked me why anybody would do residential over commercial. And that changed the trajectory of my life, dropped what I was doing, became a full-time non-residential commercial real estate investor.
Wow. That is certainly impactful, and I've never really thought about it that way, but you're certainly correct. On the commercial side of things, the tenants are often, paying for a lot more and improving the building like you mentioned too. So that's very cool. Um, from my research, a lot of this that you've built up, that you've kind of developed was with a full-time job in IT. Is that correct?
No, it was a clean cut. When I
Okay.
started doing real estate, I actually had an IT consulting business that I started. But as soon as I had that moment, I shut that company down and just went full time into real estate.
Gotcha, gotcha. Was that the right move? Is just making it as clean and as possible, or what would you do differently?
I believe it was because I would spend hours and hours every day looking for deals. And I have a very supportive wife who gave me enough rope to hang myself. And luckily I didn't have to. But yeah, it may not be the right move for everyone. And this, we didn't have our first child yet. So we were able to afford it. We didn't really live large. So we live within our means, and it certainly was the right thing to do. And for anybody young, that's it's a great question because um, you should not be in a position where you're a slave to your job, right? So I get it when you graduate college or when you start working, start making a lot of money, you want to go out and buy something nice. But my advice, stay in an apartment, don't buy that crazy car, right? Delayed gratification. And this way, you're not a slave to your employer. And there have been several times where I tried to quit my job and whatever side hustle I had at the time, whether it was a marketing company, a web design business, different types of businesses along the years, I would go into my boss's office and give him my 2 week notice. And they would end up talking me out of it, giving me a raise, a promotion, an assistant. And I took the easy way out and I accepted that promotion and the raise because I didn't have the guts to quit my job. Um, so when you're young is when you could be nimble.
Hmm. Yeah, I like that. I love that. The delayed gratification message really resonates with me because I try to practice that as best I can. So I really like that. So awesome,
And,
awesome.
and that's in the beginning, right? But what I'll tell you is once you have a path to progress, once you are a commercial real estate investor, go out, buy whatever car, house you want, And this way, your back's against the wall.
Mm,
You don't have an option to fail.
mm,
And you can't save your way to wealth. So I've had people that I've mentored, and Alex, these people, one guy in particular, lived in a nice home. He had kids, nice backyard. He ended up living in one of his C-class apartments. He moved his family, sold his house, moved into a C-class apartment. And I said, why in the world would you do that? And he said, I want to be able to save money so I can invest more into real estate. Well, the kicker was he already knew how to raise capital. So why would you do that? Why would you uproot your family, compromise their lifestyle to save a little bit of money? Makes no
mm,
sense, right? So
hmm.
once you've got the knowledge, the tools, and you've done a few deals, go out and buy whatever you want. Live large, right?
That was
This
gonna
way,
be that was
yeah,
gonna
this
be my
way your
go ahead.
back's against the wall and you don't have an option other than to succeed.
Mm. Okay, that's really interesting. That was going to be my next question is, um, I like I mentioned, I'm a big delayed gratification guy, but to be transparent and honest, I feel like I'm going to have a difficult time knowing when to make that flip, right? Because right now, my car costs $2,000. Like I'm that kind of guy, discount groceries only. But you're saying making that switch, is there when you have certain skills? I guess where can you define that line when it's okay to kind of
Can we
make that
dive into
switch?
you a little bit?
Please, yeah, let's do
Okay. How many deals
it.
have you done?
They're all small deals. Duplexes for my own round of properties. I've worked on a wholesaling team that's done hundreds, but
Okay.
my own deals, small single families and duplexes. I've got 12 units, and I think it's seven-ish transactions.
Alex, do you raise capital?
Not really, not to any effective, you know,
Why not?
nothing more than ever, um, nothing more than ever $50,000 on a deal, I would say.
Okay. So you have raised capital or partnered with people in the past.
Yes.
You know how to make money. What's keeping you from doing another 5 deals between now and the end of the year, 4 months from now?
Hmm.
What's your
Focus.
bottleneck? Why can't you do 5 more deals this
Um,
year?
Probably time and focus, to be honest, because I'm that the real estate is more of a side hustle, I guess you could say, because my main daily job is I run a painting business. I'm a painting contractor. I've got employees and things like that. So probably time and focus is the reason I'm not um,
Okay.
growing bigger in the real estate world.
Focus, I don't know that I can help you with. Time, I can. You've read the book Who Not How?
Not yet.
Okay, so read that book. Um, what I want you to do is do a time audit for maybe 2 or 3 days in a row. Set a recurring alarm for 55 minutes. And at the end of those 55 minutes, when the alarm goes off, I want you to spend the next 5 minutes, so 5 minutes every hour, and write down everything you did for the previous 55 minutes, no matter how big, how small. I watched the news for 20 minutes. I replied to these emails, whatever it is. I took this phone call, I made this call, and I don't want you to look at your notes for a week. And then I want you to look back on it a week later, look at your notes, and think about which of those items you could offload.
Hmm.
Now, human nature will teach you to say things like, well, it's easier if I just do it. Instead of me training somebody on how to make this call, it's 2 minutes. I can just do it. But you've got to strip yourself of that mentality, right?
Hmm.
Figure out what things you can outsource.
Hmm.
And for you, no, you're not ready to live large. I would look at hiring somebody as either a personal assistant, hire somebody, maybe just if they find deals, they get commissions, whatever it is, right?
Hmm.
Partner with people, whatever it takes to do the next deal, and then figure out all the effort you have to put into getting that deal done, multiply that, and do more deals. Now, of course, capital is an issue, right?
Hmm.
So you've got this forum, this podcast. You have a network that you can raise capital from. You probably haven't done a great job of exploiting that. So I need you to scream to the world, I am a real estate investor and I am taking on partners for deals, right? So now when people want to invest money in real estate, they know to go to Alex. So now you've solved the problem with capital, the deal flow. Once you look at the mechanics of what it takes to get one deal done, you amplify the effort and you get more deals. So let's say it takes you 20 hours to find one deal. Can you train somebody to find a deal? It might take them 40,
Hmm.
right? And then you train two people and three people.
Hmm.
So it's you know, my buddy Joe Fairless and I were on a stage and we talked about the four biggest mistakes we made in commercial real estate. And at the end of that talk, he said 20% of my success is attributed to mechanics. 80% is mindset. And I thought, man, that's a crazy number, really. And this guy's got $3 billion of assets under management. And I thought, really, 80% is mindset. I teach a mastermind class, and I went to my students that evening and I said, hey, this is what Joe said. Do you guys really believe 80% of your success is mindset? And overwhelmingly, everybody was yes, 100%. People said, matter of fact, it's probably 90% mindset, 10% mechanics. So, knowing that, all you have to do is change your mindset. You've got the mechanics, you've done deals. It's just mindset, right? Scaling
Hmm.
mindset, putting the right tools and systems in place, and you'll be a made guy.
Well, that's very reassuring. It's funny. I'm in the middle of a 2 week time audit right now.
Oh,
Um,
good.
yeah, it's going well, and I do have a personal assistant that I'm going through that process. And like you said, it's difficult because I know this task takes me 5 minutes, and it takes me 35 minutes to try to explain how to do it to them. But I'm currently working on that and doing that right now. So
And
that's
have
super
them
encouraging.
create standard operating procedures for every little thing. And this way, if that person ever leaves, the next person can hit the ground running. So
Hmm.
good for you, man. You don't need my advice. You're already on your way.
Oh no, no, I certainly do. No, that's super powerful, and I really appreciate that. That's awesome, awesome. Okay, and is that you mentioned you do some coaching mentoring? Um, that's in addition to the commercial real estate investing? Are those kind of combined or separate?
It is very separate. I am still a full-time commercial real estate investor. The coaching thing is because I love to do it,
Hmm.
and it started because a bunch of multifamily people came to me wanting to learn commercial. Multifamily was too saturated, the returns are too low, and it's just an overly competitive market for low margins. So I started teaching people, and that just evolved into we've got 107 people in our network now, and we've never had a student lose money on a deal.
Wow,
And then this is going on 4 years. Yeah.
wow, that's amazing. And
So why do you not look at commercial deals? And I
well,
mean
actually,
non-residential.
that is, I think that's the next step for me. I
Okay.
see all the problems that you're talking about with residential, and especially small residential. That's kind of amplified. But yeah, I think looking forward on my real estate path, I think bigger deals, commercial deals, and even non-residential. I really do. I think I find those attractive.
The Wall Street Journal recently had two articles, and one of them, the headline was retail, investing in retail real estate is the best kept secret in real estate, or investing in retail is the best kept secret in real estate. And then the other article was about real estate being, or sorry, about retail being at a 20-year high in terms of the best time to invest. We've got the lowest vacancy in 20 years. And the time to rent a retail spot is also the lowest in 20 years. It's the healthiest it's ever been. And the problem is when you ask somebody about retail, they keep thinking the Amazon effect, internet's going to kill retail. They see the big box stores closing, Sears, Kmart, JCPenney, Rite Aid, Toys R Us, all those stores that close, right? But they don't see that Dollar General's opening 800 stores, Tractor Supply is adding 4 million square feet. All these retailers are massively expanding. It is the best time to be in retail. And if you look at any big city, the cranes that are there are building multifamily. When's the last time you saw retail being built? It's very rare,
Hmm.
right? So again, the supply is limited and the demand is at an all-time high. So I would encourage you and your listeners to look at retail real estate. Look at the little strip malls where you go for the dog groomer, the insurance place, the pizza guy, the deli. Those are internet resistant and recession resistant businesses, right? And they're in suburban downtowns where those neighborhood services are always needed. You could pick up strip malls for three, $400,000.
Wow.
Smaller, older ones, right?
Right.
But they
Right.
cash flow very well, way better than multifamily. And email me and I'll give you my pro forma. It's a two-column, very simple napkin math pro forma that all of my students have used. I've used it for 15 years. So my email address is just ash, at Invest Beyond Multifamily. Any of your listeners that want it, happy to send it to them. So just start underwriting retail and look at the numbers.
Hmm. Wow. That that's awesome. When you say it, it gives for some reason in my mind, I think I don't know if I make it more complicated than it is, but when you say it like that, it's just there's a lot of clarity there, and that's awesome. And I'll include that in description for the listeners there. So that's very good. You mentioned a lot of the benefits to non-residential real estate. Like right now, the market conditions are excellent for it. You mentioned higher cash flow. What are you seeing in terms of it's probably obviously very market dependent, but retail versus multifamily for kind of market specific, how much more cash flow are you typically seeing?
I also am a podcast host for Joe's podcast. It's not mine, but I've interviewed hundreds of multifamily operators, and they get excited about an 8% cash on cash return.
Mhm.
And we won't do a deal unless it's 15% or higher cash on cash. But we've turned down 12 and 13% deals because there's not much upside, right? So even if it's 15%, if
Right.
there's not a significant value add, it's not a deal that we want.
Mm,
So at the end, upon sale, we need to be way north of 20% cash on cash returns,
wow. That's awesome.
or it's not a deal, right? It's
Right.
it's parking money versus growing money.
Right. And for the audience, the cash on cash return, kind of the cash flow, but the upside is like you're doing improvements to the property or raising the rents and increasing the value, correct?
Correct. Or filling vacancies, right?
Okay. Okay.
So ideally, we love buying properties with below market rents, some vacancy, and the surrounding competition is much healthier than whatever we're buying, whether it's office, retail, industrial, medical, flex. We're asset agnostic.
Awesome. And are those kind of your go-to strategies then? Is identifying one that's, below market rent and some vacancies, or is there any other value add strategies? Like, in multifamily, you maybe you'd renovate units or do the common areas. Is there any other tips and tricks for value add?
Yeah, it starts with looking for either mispriced, mismarketed, or mismanaged deals.
Okay.
So residential realtors are a great source for commercial deals. Whenever a residential realtor is asked to list a commercial property, they almost always say yes. Oh, yeah, I could do that, right? Happy to do it. But they don't know how to price them.
Hmm.
They don't know NOI and cap rates. So that's one great source, and that's mismarketed and mispriced. We've had commercial brokers who will only list their listings on their mom and pop website, not on
Mm.
LoopNet, not on Crexy, not anywhere else except their little website that no one ever goes to. So that's mismarketed, right? Shame on them. And then mismanaged is just, let's say it's a property where it's a stepchild property of somebody. They own $50 million of real estate, but this one strip mall is just gone vacant because they don't want to pay any attention to it. It's a write-off.
Hmm.
So that's starting. That's how we look for deals, right? And then in terms of adding value once you have the deal, certainly leasing up vacancies, the goal is to increase your NOI, either cut expenses or increase revenue. Changing leases, uh, you know, putting more maintenance on the tenant. So if it's a gross lease, when it comes time for renewal, we may add in HVAC repair and maintenance. We may add in that they pay a portion of taxes, insurance, and maintenance. So you try to get closer to triple net leases where the tenant is responsible for all of the expenses,
Awesome. Yep.
right?
Yep. All about reducing expenses and increasing income to make the building value higher.
Correct.
Awesome.
And then also, Alex, the caliber of tenant increases the value by reducing the cap rate. So if I have a mom and pop coffee shop, it might trade at an 8 to 10 cap. If I have a Starbucks, it's trading at a 5 or 6 cap.
Mm,
So if you have credit tenants, meaning a corporate guaranteed lease from a national tenant, the value of your property goes through the roof. So you can take a vacant building, stone construction, metal roof, and buy it for a couple $100,000. If you're able to sign Dollar General to a 15-year lease, you just made $1.4 million
wow.
by signing a piece of paper, right? So we just recently signed O'Reilly's Auto to 37,000 square feet, and that NOI increase comes out to about $3.5 million. So, it took a year to get this done, but one signature, one lease adds $3.5 million to a $5 million property.
Wow. That's amazing. That's wild.
Yeah. So
And
caliber of tenants is very important.
gotcha. And do you guys do property management in-house then for your properties?
Yeah, we do it all in-house. A couple properties that we inherited with great property managers, we've kept them on. But
Hmm.
I want to self-manage. I want every tenant to have my cell phone number and my entire team's cell phone, because if there's a problem, that's an opportunity for us to make a positive experience out of it, right?
Hmm.
And I'm there's not a single property manager that's going to treat my tenants with as much care and respect as I will.
Yep. Yeah, that's true. Okay. So you guys mostly manage in-house unless you have an excellent property manager already rolling. Um, what
Yeah.
are what are some of those key tips and tricks to getting those high credibility tenants or finding them?
Believe it or not, there really isn't a secret sauce other than pounding the pavement. There's a lady by the name of Beth Azor, has a ton of content out there, and she's known as the canvassing queen. So when she's like a mercenary. If you have a mall, a giant strip mall or whatever, where you need to fill it with tenants, you hire her, and you know what she does? She goes knocking on doors at businesses, government locations, and tries to find tenants.
Nice.
So literally pounding the pavement, calling everybody, doing your own legwork, reaching out to Chipotle and Starbucks and
Hmm.
Dollar General, finding their real estate people and saying, "Hey, I've got this great location. Are you interested?" And they're not going to respond, so you got to find other ways to blow them up, right?
Hmm.
So
Right.
I've hit some of these real estate people up on LinkedIn, and if I don't get a response, I'll find them on Facebook, send them a Facebook message, right? So you got to, their time is very sought after because everybody wants the land, those national tenants, because you
Hmm.
make a tremendous amount of money when that lease is signed. So finding ways to get through to them, find a mutual contact that you're friends with and have them make the introduction. There's a million different ways, but just giving it to a broker and sitting back is not an option, right?
Gotcha.
It'll get done slowly, if at all, unless they have contacts ready to go, but
Hmm.
you've got to put the legwork in.
Outbound. Just dial
Yeah,
up the volume on outbound.
100%.
Awesome. That's awesome. Awesome. I love that. Okay. And I definitely want to be respectful of your time here, where I know we're coming up kind of close to the end. But real quick for the audience, on your journey up until this point, would you identify like this point here, like this was my biggest failure, or maybe lowest point, and what you learned from it?
Yeah. Um, Maybe 4 years after I got into this, people kept saying, "Wow, everything you touch turns to gold." And I started believing it. So there was an auction, an estate auction with about a dozen commercial properties that was going up for sale. And it was in a drug-ravaged town with a bunch of job losses. But it had its heyday 30 years ago. It was a tourist town on the river. So I was out of town. I asked one of my tenants who lives in that town to go to the auction on my behalf. And I remember I was on the phone. I couldn't hear a word that was going on because it was so loud with the auctioneer in the background. And all I kept hearing is, Ash, do you want to keep bidding? I'm like, yeah, yeah, keep going, keep going. I ended up buying about a half dozen properties. And again, I thought I'll do what I've always done. I've taken vacant properties, I've taken properties where developers ran out of money, and I've just, worked my tail off to turn these things around. And I thought I could do the same thing. So when I came back to town, I went to go visit these properties that I bought. And Alex, one of the buildings that I bought was half torn down. And like my stomach just dropped, right? I bought a bunch of garbage. And it took me probably 6 years and a ton of headspace to offload each of those. And the lesson learned was my ego got the best of me, right? And it just took, again, years of dealing with squatters in these properties, problems, roofs, not being able to find tenants. Just finally was able to offload the last one this year. So, yeah, lesson learned. And everyone, I think, needs that. They need to be humbled, right? And the
Hmm.
problem that we have now is anybody under the age of 33, 34 has only seen good times, right? They've not seen an economic downturn and what happens when that occurs. So I've lived through several market cycles and I know how painful they can be. So unfortunately, a lot of young people are going to learn that lesson relatively soon.
Mm,
But be humble. Don't let your ego get the best of you and always do your risk analysis.
gotcha. Awesome. That's powerful advice, Ash. I really appreciate that. And I really appreciate you coming on today. Is there one thing, maybe it's that last thing you just said, but is there one thing you want the audience to really like come away with this podcast with?
Yeah, I've spoken with hundreds of people over the years, and when I ask them why they don't do commercial, it's always too hard, too expensive. I don't know anything about it. Or
Hmm.
multifamily is better, right? And all of those things are false. It's not difficult. I mean, you can find a 1 or 2 unit retail building in your suburban downtown, underwrite it and make money, right? Figure it out. So start small, but I would certainly look at other asset classes other than residential.
Hmm.
So we have a lot less competition. And again, the returns are much higher.
Mm. Excellent. Excellent. I really appreciate you coming on today and your tremendous wisdom and experience. It's certainly made a shift in my mind, and I'm sure the audience as well. So I'll send you an email. I'll get that pro forma, and I will take action. And I'm sure there will be others that will follow. And
Good.
really, 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 really appreciate you coming on today.
And thank you for your time as well and this opportunity. So thank you.
Absolutely. All right, you guys, signing off here.